Traders, in today's video we're going to be showing you a strategy that we've been working on. This strategy is for somebody that doesn't mind holding longer term. In fact, you should be okay with holding the trade for a couple days, even weeks. Now, I know at OneUp Trader you need to be flat by 3:15 p.m. Central Time, but it's really going to have no effect on the strategy at all, because you can still swing trade at OneUp. All you need to do is just close your positions by 3:15 and then reopen the position again at 5 p.m. In this strategy, more than likely you're going to need to do that. So you're going to need to set an alarm or get a setting on your trading platform that actually liquidates the positions for you. And then once the Asian session starts at 5 p.m., you just reopen the position again. Stop losses, targets are all going to be exactly the same. So the only difference in doing this compared to doing it on a personal account is just that you're going to be paying a little bit extra for commissions, which isn't going to be such a big deal. A few things that we need to look for when we put this strategy in place is, okay, obviously the indicators are going to be an anchored VWAP. If you do not have access to an anchored VWAP, you can find it on TradingView. In TradingView, it's very easy to find. You just go into indicators, you search for anchored VWAP, and you'll see there that it comes up. Once you've applied it, you'll see it comes up to the trend line tools here on the left, and you can anchor it to your chart anywhere. It's free to use, so you shouldn't have a problem with that. Now, where do we actually anchor the VWAP? Well, we take a look at our hourly chart and we look for the most major swing that's within about 6 months of the current time that we're trading at right now. So we're in the beginning of December, so the furthest back we really want to go to is about July. And we just look for the most major swing high and then the most major swing low. So here we've got the most major swing high and I've anchored the VWAP there. And then this is the most major swing low that we've got too. And we've got the VWAP anchored at this point now. So let's ignore this section over here and just focus in a bit on the arrows here. The next step that we do is we drop down to a 15-minute time frame and then we put on an RSI. Now you can use another indicator if you like, and in fact you don't have to use an indicator, but the idea here is that we're looking for an area in the chart or specific times where the price is actually oversold in the overall downtrend. The anchor VWAP allows us to identify that the trend is down, okay, because it's telling us what the volume weighted average price is. Every single time that we see the price start rallying up into the anchored VWAP, we want to start looking to sell into that buy pressure because the overall trend is down. Now, this strategy is going to require a lot of discipline and a lot of patience because you are going to most likely see trades run against you at some times for a while, and you may even see it run flat for a couple days or even a week before you start seeing profits. But it's a really strong long-term strategy, especially if you have other responsibilities during the day and you don't have the time to sit behind computer trading all the time. The first thing that we look for then, once we've got the 15-minute chart on and the RSI's default settings, is we simply start initiating into a position once we see it at overbought. Regarding the risk management side of it, it's really going to come down to you and what's going to work for you. Better than not, this strategy is going to work with a larger account. So 150K account would be perfect for this strategy. You can even use the micros, where every candle you see that is in the overbought section on the RSI, you can initiate one micro contract. There's 4 opportunities here, so you would be short 4 micros at this point, giving us an average price which we can draw over around, let's call it around there. That's our average price at this entry over here. We see that it runs sideways for a little bit, and then we have another time where the RSI is overbought, where every single candlestick we are entering into one micro short. We would say that our average price could be at around this point for that specific entry, for those specific entries, which gives us an average price of about here. So we're not going to calculate it exactly, but you can see that this is where our average price would be at this point. And we wait a little bit longer and we see that it's still running sideways as it starts rallying up to the VWAP. And then we have another opportunity here to sell some. So each candle we enter into short with a micro. Of course, you can use the larger contract, but that's going to depend on your account size. And then you can adjust the risk management in your plan. So for example, if you're trading the 150K account and you don't want to trade the micros because the commissions are worrying you a little bit, then what you can say is okay, I'm only going to initiate one short position, one contract short when the RSI is overbought. If it goes overboard again, I'm going to take another short position. And then, so in this example here, you would have 1 to 3 shorts instead of multiple micros. So it's up to you which approach you would like to take. So once we've taken our short up here, this gives us an average price of about this level over there. So you can see how this is a very different type of strategy. Instead of us trying to time the market perfectly, as a lot of day traders would tell you you need to do, because a lot of the time we have strategies where we take a position, we need the market to run with us immediately. And if it doesn't, we get stopped out. This is a strategy where you don't need it to run with you immediately. You are going to run wide stop losses and give yourself the best opportunity, because you're going to probably see that you're not going to take many trades, but you're going to have a high win rate. Let's talk about then where we can actually place the stop losses. So the first place that we want to look for to add our stop loss is going to be on the anchored VWAP. Now, if we're looking at this specific example, we can see that it's about, let's call it 300 points away from our entry. Now, you can see how micros can be a good way to trade this. And you can always adjust the strategy yourself to see how you can manage the risk element regarding the strategy. You must also understand that when you're trading a strategy like this, you can't take the traditional approach of having a tight stop loss or a 1-to-1 or a 2-to-1 risk reward ratio in this type of strategy. Since we are averaging into the position over time, we have to give it a wide enough stop loss. A 300 point risk, it's a lot of risk for somebody to take. And if you're trading the 150K account and you're trading the max, or you're trading the larger contracts, if one trade doesn't work out, then the whole account is most likely going to get blown, which is why you should consider using the micros or adjusting the risk to your preference. In fact, actually, as the price starts moving up into the anchor VWAP, I forgot to mention, we need to start giving ourselves a little bit more room above the anchored VWAP as well. If our stop loss is running on the anchored VWAP and we see a short entry come in when it's close to the anchored VWAP, we need to start extending our stop loss above it slightly. And the maximum that we go above it is about 100 points or so. Usually, if we see a break above the anchor VWAP of about 100 points, once we've seen the trend down for so long, it's actually an indication that we're going to go into a very strong consolidation period, or the trend is actually going to reverse at that point, which is, of course, not a time we want to be short. From here, the targets are very simple. All we do is we zoom out once more and we measure what the largest difference was between price and the anchored VWAP, which you can see is roughly around this place here. So we measure that distance, and once we get that, we take it from our anchor VWAP on the entry once we start seeing the profits come in, and then we set our profit target at that point there. You can see how this strategy is very different to how most of day traders are trading these days. I urge you to take a look at different ways of how you could manage it. In my opinion, using the RSI is a great way of taking the entries into this specific strategy. However, I do understand that the risk management side of it is going to be a bit difficult for you, especially if you're trading the larger contract on NQ.